Hi everybody, it's Daniel here from InfoRest. Hope you're all doing well. So we got to talk about the employment numbers that came out for Canada, right? The headline number for the employment change, it came out at 50,000 versus the expected 25,000. Looks good, right? Double than what was expected. But when you dive deeper into this report, there's something a little bit more alarming here. When you look at the unemployment rate sitting at the actual number 6.8% versus the expectation of 6.6%, that number is starting to look quite scary as we approach the 7% level and even higher. Now, the 6.8% number takes us all the way back to October of 2021, when we were coming down gradually from the peak 14% level back during COVID, when the unemployment rate level skyrocketed to that double digit 14%, right? Now, this 6.8% that we're seeing is also above pre-COVID levels, right? Right before that big spike, we saw COVID levels were around 5.6%. And when we look at previous recessions, right, we saw back in 2009, right, after this whole real estate crash, closer to the end of 2008 happened, the unemployment rate in Canada was sitting around 6.6%. So higher than those two levels. And when you look at the overall trajectory and the trend of the unemployment rate, the lowest level we've seen it was back in 2022, where it was sitting in 4.9%. So we went up from 4.9% all the way now to about 6.9%, or sorry, 6.8%. And this number continues to gradually grow higher and higher and higher. Now, this is alarming because one of the main mandates, and that's important for Bank of Canada, is not just inflation and taming inflation, is making sure that the job market and that Canadians are doing well, are doing fine. But when we look into this unemployment rate and we dive into it, we're seeing it's not doing fine. Thus, why you're getting those 50 basis point rate cuts. We also heard recently Trudeau fly down to Florida to talk to Trump about these tariffs that potentially might be put on if Canada doesn't agree to a few things from Trump. And we heard that Trudeau mention that Canadians would suffer greatly if those tariffs come in. So there's a lot of risks for 2025 and for the future when you have the unemployment rate going up, when you have stress, when you have the job market weakening, right? And you have the Bank of Canada going and doing these 50 basis point rate cuts. Now, you'll get realtors, you'll get mortgage brokers, and everyone telling you, buy, it's the time to buy, get those, buy those condos, buy that property. Well, because why? Because rates are coming down aggressively, so we're going to see real estate to the moon. Well, actually, real estate has peaked, and we haven't seen the true crash yet. We haven't seen the true recession yet. It takes time for the recession to play out. You need pain, you need cracks to show up, which we're seeing. And then you need an event. Every time a recession comes, is that there is an event that comes. And before that event, there is pain, there's cracks, there's signs, but you need an event to trigger it. It's just simply, let's take an analogy of, let's say, a person's health. Let's say person X. There's signs. Pain in the heart, pain in the chest, comes and goes, stress levels high from your job, etc., etc. Eating habits are bad. Maybe, you're not going to the gym that much or not at all, right? health is declining, you go to the doctors, they tell you, hey, avoid maybe carbs, etc., etc. You ignore it. And then over time, there's signs that, your health is deteriorating until one day, boom, you fall on the floor and then you have to go to the hospital. It works the same way in the economy. There's signs, there's cracks. The 6.8% is not something to be proud of. And the 50 basis point rate cut that we've been getting from Bank of Canada is also not to be celebrated, even though a lot of people out there are celebrating it. But it's not. And the expectation for this week, we've got Bank of Canada coming out this week. Guess what? They're going to do another 50 basis point rate cut this week. Now, what you want to be keeping an eye out on are those emergency rate cuts that we get after this, right? That's the 75 basis points, 100 basis point rate cuts. Do they come out, before their scheduled meetings, decide that they're going to slash rates aggressively, right? That's what you want to keep an eye out on, because then really shit is hitting the fan. So there's signs, there's cracks, there's pain, and we have yet to see it escalate. Now, when we look at the Stats Canada and we break down and we look more into this unemployment rate, who's worse off here? We see that the youth from 15 to 24 years old, they're sitting at 13.9% in the unemployment rate, right? Very high. So they're the worst off there. Then when you look at, the total 15 years and older, it's sitting around, like I said, 6.8%, as we see in this report. So the youth is really worse off. Now let's break into different age group, like 25 and 54 years old. They're sitting at 5.8% when it comes to the unemployment rate. And people above 55 years old, the unemployment rate is 5.3%. So the youth is definitely worse off here. We also can look into different industries. When we look at manufacturing, transportation and warehousing, natural resources, business building, support services, information culture, recreational, agriculture, they're all in the negatives when it comes to the employment component. So there's a lot of job losses. The worst ones are manufacturing, transportation, warehouse, and natural resources. So manufacturing, transportation, we need these things. They're important. There is what keeps, the life, they're the blood of the economy. If you're not transporting goods, you're not manufacturing things, then, the economy will decline. The growth will decline. Now, on the positive side, ones that added jobs and are doing well is wholesale, retail, trade, construction. Well, construction, whether in recession or in good times, you'll see construction happen. Although yes, construction will contract in a recession, but you get construction there regardless in the cycle, because you need it in order to also prop and help the economy. So construction is doing well, and professional, scientific, and technical services, educational services are doing well. Accommodation, food services, finance, and healthcare. But the top three, the best ones, wholesale, trade, construction, and professional, scientific, technical services. Now, when you look at the provinces, you break down the provinces, right? We see that PEI sitting at 8% unemployment rate. Newfoundland sitting at 10.8% unemployment rate. When you look at Ontario, 7.6%. British Columbia, 5.7%, right? Ontario, 7.6%, right? Ontario is a very important province, especially when it comes to contributing to Canada's economy. So quite a high level, a high number there. But overall, when you aggregate everything, it comes out to that 6.8% unemployment rate. So is this employment report to be celebrated? No, of course not. There's risks in the future, Trump administration risk, geopolitical tensions, upcoming recession. It can take time, But the main key point here is the unemployment rate, like I've been saying on this channel for some time, has been going and growing steadily. We're at 6.8%. Wait till we get to the 7+%, and wait till things really pick up. You'll see the panic from Bank of Canada. You will get those 75 basis point rate cuts, 100 basis point rate cuts. What are the realtors going to say then? Buy, buy, buy if you're losing your job? I don't think so. Well, maybe they still might. You never know, right? But it doesn't necessarily mean it's a good thing, right? Although, yes, it might present some opportunities, right? If you can buy an investment that is much cheaper, sure, 100%. But in terms of the economy and what's going to happen, definitely these are negative signs for the future. So anyways, pretty interesting report. Will be very interesting to see how 2025 plays out. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.